Financial Planner. Follow us on YouTube.
The central banks make their move. This is how they're doing it. Financial news. Let's get into the economic collapse financial news. Now, we just finished up 2017. Here we are in 2018. But let's go back a little bit to see what has happened in the year of 2017. We saw cryptocurrencies. They were put out into the public arena where people started to realize what they really were. Yes, they were there before, but people weren't really looking at it until very recently, and then people jumped on board. And we see that Bitcoin, well, it rose 1,300% in the year of 2017. We see 1 out of every 10 young adults in the United States, they've been homeless at some point over the past year. And we've been talking about how the economy not improve whatsoever. And we can see that there are certain parts of the country where they are still reeling from the Great Recession. And there are many parts where they haven't recovered at all, or there are many parts where they have declined. Now, yes, there are certain parts where they've been pumping this up to make these certain cities look great. But when we look at the country as a whole, we can see that the people's economy is falling apart in front of us. The United States right now has lost more than 70,000 manufacturing facilities since China joined the World Trade Organization in 2001. The all-time record for the number of retail store closing in the United States was absolutely shattered in 2017. 6,985 store locations were shut down last year, and right now they're looking at 2018 and they're saying they might be able to break that record in this year, where a lot of the brick and mortar stores are going to shut down. And no, it's not all going to Amazon. No, it's not all going to online. Yes, a small percentage is. Yes, online is growing, but the number of stores that are closing compared to the number of sales that are online, well, it's not a apples to apples type of thing where we're seeing the exact same loss and growth. So we can rule that out right away. We see that we've hit the $20 trillion debt mark, and it's continually moving up. According to the most recent numbers that we've have, 41 million Americans are currently living in poverty right now. The Dow Jones Industrial Average was up more than 5,000 points in 2017, and that shattered the previous record of 3,472 points in 2013. Back in 1960, an average of $146 was spent on health care. Today, $9,900. Thanks to Obamacare, an appendectomy is 10 times more expensive in the United States than it is in Mexico. Thanks to Obamacare, a family of 4 in Virginia is now facing the prospect of paying $3,000 a month for health insurance. It is being projected the average rate increase for Obamacare plans will be 37% in 2018. Right now, the U.S. economy only grew an average of around 1.33% over the 10 years prior to 2017. 78% of all full-time workers in the United States live paycheck to paycheck, at least part of the time. According to the Federal Reserve, the average U.S. household is now $137,000 in debt, and that figure is more than double the median household income. A staggering 59.8% of younger millennials, 18 to 25, are now living with relatives, and overall, an all-time record, 38.4% of all millennials are currently living with family. Why? Because they can't find the high-paying jobs. Yes, I know the unemployment is at a very low rate, but that is made up of a lot of part-time jobs where they count it as a full-time job. And it's very, very misleading. Larry Katlikoff says that the federal government is facing a fiscal gap of $210 trillion over the next 75 years. At this point, 20% of U.S. households have either zero or negative wealth. And this is how the central banks work. They steal from the everyday person to make themselves very wealthy. This is why when we look at all these numbers and we go back in time, you can see what has happened here. I mean, think about this for a second. the Federal Reserve has put everyone into debt. They owe $137,000. I know people are going to say, well, I don't feel it. I don't have to pay it. Guess what? If they call in their marker, you will have to pay it. And you owe $137,000, but that figure is double the median household income. So how do you pay that off? Over time. And guess what? The debt continually grows. It's an impossible situation. You can see how many people have to live at home with other individuals because they can't find the full-time, high-paying jobs. You can see how healthcare has gone up. I mean, people can't even afford that. You can see how many stores are closing because people don't have the funds to go out shopping. I mean, if you look at this, you could see why this is all happening. Yes, you have the stock market moving up 5,000 points in 2017, but does that really help you? No. It doesn't help you at all. If you look at what's really happening to the people, they're being put into debt, their wealth is being stolen, and the situation is just going to get worse because if you think about it, 20% of all U.S. households have either zero or negative wealth. That's a lot of people. So when you look at the situation, you can see that nothing has really improved. Actually, over time, it's getting worse. Now, a lot of people are going to say, well, it's only 20% of the U.S. households that have either zero or negative wealth. Well, guess what? If you look at the other part of it, where we have 80%, do you really think 80% has that much more? Because we see the other 20% has anywhere from maybe 0 to 5% worth of wealth. It doesn't go from 0 to negative to 100% wealth. It's a step ladder. So you're really looking at the top people that actually have the wealth. The other 80% or even 90% or even more than that, they lost a lot of their wealth. And yes, there are still certain people out there that are still making it, those people that were in the baby boom generation. But the new generation that's coming up, they're finding it very, very difficult to survive. Now, we talked a lot about cryptocurrencies and how the central banks are making their move to basically take control of the crypto market. We see that Russia's crypto rules, well, they're not doing what everyone thought they were going to do. Now, there was an earlier announcement where they made an announcement saying that the Russian government was looking at cryptocurrencies and they were going to create rules around it. One of the rules that they discussed at great length over the summer was a crypto ruble, and that has been shot down completely. Another one was integrating cryptocurrencies into day-to-day Russian life. They got rid of that too. Regulation of miners and mining as taxable profits, that they kept. This draft legislation is about as hostile to cryptocurrencies as it could possibly have been. The Russian banking system and the politicians connected to that are the real fifth column within Russia. And it looks like Putin has yet to get that part under control, because what we're seeing right now is that the central banks, and remember, there's still a central bank in Russia, the central bank in China, central bank in most of the Western countries, they want full control of this market. And you have to remember what happened during the internet boom, where they thought, it's just the internet, nobody really cares about it. Well, they've learned their lesson. They realize that they should have taken control of the internet at that point. This way they could shut down social media, they'd have rules and regulations, they wouldn't have the alternative media, they wouldn't have all these problems. So what they're seeing right now is they're looking at the crypto market and they're saying, okay, we need to jump on this very, very quickly. Now, I know a lot of people think that the crypto market was created by the central banks or government or things like that. Maybe it was created by one of these individuals, but it was not created by the central banking system to take control of the world currency, because if they actually did that, they wouldn't make it a decentralized system. They would make it where they already have control over it, and all they had to do is pass laws. They would make it so people can create so many different coins out there where they had to reel it in. But we could see what they're doing. They're looking at this, and when it first started, They didn't really care about it. Nobody really cared about it. And as time went on, as more people looked at it and said, hey, we could use this. This is a ledger system. This is decentralized. This is an honest system. We could use it. This is when they started to look at it and say, maybe we can't let this go any further. And this is what we're seeing right now. And we talked about a theory where they might be pumping the market up, buying a lot of these coins, pumping Bitcoin up, and eventually going to sell it just to show that the crypto market without them is very volatile, and this is why you need them. If you go back to 1913, prior to that, this is exactly what they did with paper currency, where they said, hey, look, it's too volatile. You need a central bank to run the system. It doesn't matter if it's digital or paper, it makes no difference. They're using the same strategy. We see the Bank of England is now compiling a report that may lead to it issuing its own cryptocurrency. And the cryptocurrency might be based upon the value of sterling. Now, banks do realize the potential that crypto's underlying blockchain technology has to offer, and they want to take full advantage of this. Plus, they would love to cut out virtual currencies altogether and replace it with something that they can control. This is what they're trying to do. The Bank of England is expected to release a report this year that could lead the bank to issue its own cryptocurrency, which would be tied to the value of the sterling for its worth. Now, there are a couple drawbacks to cryptocurrencies. They're decentralized, very hard to manage them in one location. And we see Mark Carney, the bank governor, he's saying that there is a potential fly in the soup when it comes to the Bank of England creating and releasing its own cryptocurrency. Central banks currently use electronic payments, but such exchanges are handled in a centralized fashion across accounts at the central bank. The trouble is that cryptocurrencies right now, they're decentralized, and it would allow people to skip the central intermediary and make instant payments to whomever they choose. The shared ledger of the blockchain would enable people to open accounts at any bank at any time and move their accounts if needed. Actually, I'll go a step further. They don't even need the banks. There's no reason for them. And this is what they're trying to get a hold of. They don't want the crypto market decentralized. They want it centralized where they can control this. Now, what's very interesting is that the Bitcoin surge in price could lead to two different things. One, they can pump it up, sell, because they've been using free money to pump it up, sell it, have it crash, say it's volatile, move into their own maybe utility-based type of coin where they can control it, or a Fed coin, or whatever they're going to use. It's already waiting in the wings. They already have it. Or, and this is coming from Jeff Berwick, they can use Bitcoin to crash the financial system, where they could say Bitcoin, as they pump it up, they pull the rug out from under it, they sell, they crash it, they could say this is leading into other things and it's crashing the system. And we could see that they could use this and say, okay, this is how we can get rid of cryptocurrencies completely, because this decentralized model does not work for the central banks if they can't get it to work. And we can see that it can go either way right now. And we can see this is how they could do it, because if they can't get another type of distraction, they might use this distraction, because we can see right now that this would be a perfect distraction. It doesn't matter what the distraction is. They just need one. They need it big enough to convince people this is why we need to move to a different system. And this is why we need to get away from that, and we need to move to something different. Now, we could see that this could be a possibility. But what I think is going to happen is I think they're just going to bring the system down and use Bitcoin as a volatile cryptocurrency and say all the other ones that aren't managed by the central banks, they're all volatile. This is why you need to go to the utility-based settlement coin. And they created that on purpose so they can control it. And I think the Fed coin, if that is actually waiting in the wings, they will use multiple coins around the world on their exchanges to make sure that everyone is using their system. And what they need to do is they need to convince governments to use this And once they do that, it's game over. And I think this is where they're headed. I think this is what they're doing because they realize the economy is completely falling apart. The people's economy. I'm not talking about the manipulated numbers or the stock market. I'm talking about the actual economy here with corporations, with retail, with all the loans, the debt that's outstanding. This cannot be sustained the way it is. No matter which way you look at it, it cannot be sustained. And they know this. They know their system was going to die at a certain point. And they're trying to get ahead of the game to basically switch everything and blame it on someone else. And this is why we need to go to a new system. Now, they could make a very good argument of why their new cryptocurrency system is going to be a lot better than the old system. Now, the old system was antique. It wasn't, worth having. On a high level, countries will use SDRs. On a low level, we'll go completely cashless. It'll be crypto. It'll be, we'll manage it. Everyone will have to use this, and this will be a better system. And you can see how they can make this argument and blame the old system for what has happened here. And I believe this is what they're trying to push for right now, and this is where they are headed. No matter what, we're going to be going through a collapse of the system. We'll be moving on to a new system, a new system where we're going to have this transition period. It's not going to be overnight. It didn't happen overnight when we moved on to the petrodollar. A lot of people were out of work. We couldn't get oil. We saw many, many problems during the 70s until things started to calm down. And of course, back then, interest rates went up very, very high because they were printing a lot of money at that time. It was hitting the public. We saw the devaluation of the dollar. There was a lot of inflation. We saw a lot of wage growth. Houses were going up in price. This was all inflation. What we're seeing right now is the opposite. We're seeing wage growth decline, interest rates very low. This is what you see on the opposite side of the system when it's dying. And we see right now, this is where we're at. We're very close to this system completely falling apart, and they're looking for a way to get out of it. So no matter what, this system is coming down.